Time for today's three-stock lunch, starting with Microsoft briefly overtaking Apple as the most valuable company in the world before retreating some. Here with our trades is Eva Ados, CIO of Shares. Eva, what do you think of Microsoft? Welcome, first of all, but what do you think of Microsoft?
So Microsoft is a hold. It's almost, as you said, a $3 trillion stock, almost at its all-time high. But we need to remember it has among the best margins in its sector, 43% for EBIT. That's 3 to 4 times larger than its peers. And also, we have seen recently a shift when it comes to the market to a less aggressive position, and that has benefited large cap stocks, mega caps, and in that case, Microsoft. And so for that reason, with the tensions in the Middle East, in the Red Sea, the supply shocks that we are seeing, and also the current, the recent inflation reading with a 0.3% increase, and that's slightly elevated. So I think this tension in the market in a less aggressive position is going to benefit Microsoft and also large cap and mega caps.
Exciting day to see them at least briefly overtake Apple. Feels like a preview of a bigger story this year. In meantime, KB Home, Eva, better than expected Q4 results beat on the top and bottom lines, but EPS and revenue were down year on year, and the stock is in the red right now. What do you do with it?
So that's a sell. As you said, their home sales are down and also their home prices are down. Their revenues are also down for the last year. And we believe that's going to continue with a 7 to 8% mortgage rate range. That's not allowing especially younger first-time buyers to buy a new house, but also for current homeowners who have secured a 3% mortgage rate during COVID, they're reluctant to face a 7 to 8%, so they're not selling their houses to buy new ones. There's very low activity, and we think the low demand will continue until we see a significant drop in mortgage rates. And so for that reason, I think there are better allocations for investors in other sectors.
All right, Eva, let's move on to the question of the day, and that is Bitcoin up more than 10% this month on hopes the SEC would approve spot ETFs, which it did, a game changer that lets investors play the space without directly owning the stuff. The SEC, of course, did so yesterday. 11 new spot Bitcoin ETFs started trading today. Which one, if any, do you like best, Eva?
I would say BlackRock. First of all, I think the underlying asset will appreciate in value because there's higher demand, but also owning an ETF is a safer, most importantly, a safer, but also more convenient way for institutions and money managers, but also first-time retail investors to buy and get exposure to Bitcoin instead of buying it directly. The reason why I choose BlackRock is that we're speaking about a portfolio of one asset, one single security, which there's nothing creative about it. So it all comes down to who the custodian is. In most cases, that's Coinbase, except for Fidelity, which is its own custodian, and also the expense ratio. That's why there is a price war. We've seen the prices come down, the expense ratios come down. They're waiving their fees for the first 6 months, or $1 billion or $5 billion. And I think BlackRock, being the biggest asset manager out there with $2.5 trillion in assets, they have economies of scale to compete in this war and be among the winners with further drops, as we have already seen them dropping their rates.
Eva, great to see you. Thanks for being with us today.
Thank you.
Eva Ados.